Well, good morning.
Good morning.
It's a little bit early for you to be out working.
I know, but you pushed me here, so what can I do? Point of correction, the broadcast will be on SABC 2.
On SABC 2?
Yes.
You come here early in the morning and then you put me somewhere straight immediately. Anyhow, it's the last MPC meeting for the year.
That's right.
What do you expect?
Well, most of the analysts I've spoken to expect the repo rate to remain unchanged at 5%. And the reason for that is simply because South Africa is currently going through a very slow economic growth phase. And even though there are risks to the inflation outlook in terms of the weaker rand, creating higher inflation, it's felt that the Reserve Bank is in a bit of a quandary because if they increase interest rates, they're going to actually stifle economic growth. And also it's not felt that the inflation picture is that bad yet, so unchanged.
The rand has been under pressure pretty much for the whole year. What direction do you think the Reserve Bank will take to try and arrest that?
Well, the Reserve Bank has always been on record to say it won't intervene in the currency. Other emerging markets do try and do it. Brazil, India, they do try and intervene in the market. And that just simply means that they buy up foreign currency in order to then try and strengthen their currency relative to foreign currency. But the Reserve Bank always says that it doesn't have the capital muscle to be able to do such things. So the rand is just left to free flow against the global influences, and we just cross our fingers and hope for the best.
Inflation at this time of the year, when we look forward to the next year, is always, I think, on many people's minds, is that how is my life going to change and how more expensive is it going to be next year to just live? How does the outlook look for inflation?
Well, so far, of late, there has been a view that inflation will trend slightly higher than expectations previously. But what happened, we got a surprise reading for inflation data for the month of October. The market had expected a reading of 5.7% year on year, but that came in at 5.5%. So then there's it's felt that perhaps that number may show that there is less pressure on the economy in terms of inflation. The rand weakness that we've been seeing is not filtering into the consumer price index, and so maybe it won't be so bad. But this is crystal ball stuff. We don't know what's going to happen next year. Another very important thing that may happen that's on the horizon is obviously what's happening in the US system. The Federal Reserve may decide to begin its stimulus tapering. And if it does that, we've already seen evidence. What happens is that emerging market currencies like ours immediately depreciate because what happens is that we're considered to be risky assets. And, foreign investors just sell out of all of our assets. And when they sell out of our assets, they sell out of our rand. So they exchange our rands for foreign currency, get out of there. And if there's less demand for your asset, your currency, it plunges. So if that should happen in response to the US Fed beginning its tapering, that will have inflation implications. But in terms of the extent, how long is a piece of string?
I wanted to ask you about the US stimulus packages. Now, in hindsight, has it been a poison, really, that they put into the system that's going to come home to roost in the next couple of years?
Whew. Okay. Remember,
is that too deep?
No, remember, I'm just a journalist who covers the area. But it's a very interesting question. There are different views about that policy. Some people think it was actually a very good policy and it's helped to bring the US out of the mire that it was in previously. Others believe that it's just a whole load of money that's going to create asset bubbles all over the show, and that, like you say, maybe down the line those will explode and we'll all have to suffer for it. I think only time will tell, but as a layperson who tends to watch this issue closely, I don't think it's been a bad policy, but I think the important thing is that the Federal Reserve must be sensitive as to how it withdraws its stimulus program.
We will see. As you say, time will tell. She sits on the fence very well, this lady. Love it. Give us the. I'm a consumer now. Put my credit card hat back on for the big days that's coming. What's the advice, sir? Shall I go and buy the new shoes, or is it time to maybe tighten the belt a little bit because we've got a rough ride ahead?
You know what? The advice is the advice a sensible grandmother would give, and that is simply live within your means. If you know you can't afford to take on debt, don't take it. Especially when you're taking on debt to actually to do basic things like eat and survive. You know, it's very dodgy. But of course, you know, it's easy for me to sit here and say that if you're in a real bind, then you need to begin to consider getting some assistance from societies and institutions that are out there to help people who are struggling.
Thank you, Nompu, but I'm sure that will fall on deaf ears. Don't go spend money that you don't have this festive season. That's the word from Nompumelelo Siziba, my prime-time colleague, telling us that we shouldn't be having a good time this Christmas season. We should tighten the belts. Thanks for joining us this morning, Nompu.